Hello, my name is Andrew Abraham. I am a trend follower. I've been a trend follower now going on the last 18 years. I want to show you an example of a trade that in the Japanese yen that started for me on Friday. And it really exemplifies what I try to, the type of trades I like taking. I like taking trades that are breakouts during pretty much quiet periods, like you can see right here. Pretty much nothing was happening for pretty much a long time. You can see almost a month and a half. And then you had this breakout. Actually, it was on Friday. It was a big move up. I have no idea if the trade is going to work or not work. Again, today it's taken off a little bit. We'll see what happens. But when I trend follow, basically is two methodologies. One is a trend breakout, which you can actually see it's breaking out. And what that means is I'm buying the X period day high. The idea of the X period day high is pretty much based on Richard Donchian, and then furthermore from the Turtles and William Eckhart and Richard Dennis. But really what you do is there's an arbitrary number, whatever you pick. If it's a 20-day high, a 5-day high, 1 second, sorry about that. Let the screen come back again. And here it is. And you decide that X period day high as your breakout. And then your Y period day is your hard money stop. Somewhere down in here, actually, the lowest low. If this is a real tick, I'm not sure. I'm not sure if that's a real tick or not. But the fact is, you figure out your breakout high, your X number of days high, your Y period low, which is much less. Like Richard Donchian did a 20 and 10, or a 20 and 5, or you pick the number. It doesn't really matter, because if something is going to move when things really trend, you'll catch it. It doesn't really matter. But really what does matter is how much risk you need to take on in order to try to generate reasonable returns. And what I do with that is I try to mitigate or minimize my actual risk per trade. What I do is I look at my account size, I look at my breakout high versus where my stop is, and I figure out what that difference is and divide by my account size. And then I'm saying I'm only willing to risk 1% of my account on that trade. That's it. Because as a trend follower, I know that most of my trades don't work. This is the reality. This is the truth. When you speak to or you hear all these infomercials, or you look on YouTube and you see all these gurus, everyone's telling you how much money you're going to make and how easy it is. I'm going to tell you this. I've been trend following for 18 years. It's not easy, and it's pretty tough. And the thing is, I've learned to almost say opposite what most people don't think is, when I put on a trade, most people think they're going to make money. When I put on a trade, I say to myself, how much is it going to cost me to see if it'll work? With the expectation that it isn't going to work. And if it does work, I'll be pleasantly surprised. So that's how I'm only risking 1% of my account. And I go through a series of all other types of risks. Risk per sector. I do open trade equity risk versus my core equity. I look at my margin to equity. I maximize the number of longs and shorts that I can have. I also have a preset dollar amount per contract or share amount that I look at. And really what I'm trying to do is trying to control things that are within my ability. And the only thing I can control is my risk, because the only thing that's certain in trading is the uncertainty. Like I said before, I have no idea if this trade is going to work, and I really don't even care. It's a small risk bet. Because when you look at some of these other bars, look at this. This thing was in a nice little uptrend, a little static period, and then ka-ching. I mean, it went from 132 and change down to 126. That's a tremendous, tremendous move to the downside. So that's what I'm always saying. You have to manage the risk. Actually, I was in this trade, and I remember it was right before the MF Global debacle. It was the end of October. And it was like the icing on the cake before MF Global. But who knows? We'll see if this trade works. But this is what trend following is. Put on low-risk bets where you're risking a small percentage of your account size. That's what I mean, low-risk bet. Every trade has a risk. Every trade is 50-50. And you go through these different steps of risks to try to mitigate. And even the mitigating is, it's almost superfluous, because you are going to have drawdowns. You are going to have long periods you don't make money. Like this year, in all honesty, most trend followers didn't make money. The prior year I did very nicely, and this year was nothing. That's the reality of trend following. And if you can get through the reality of trend following, then you stand the potential to, over time, to compound money, like personally I've done. It's not easy. You go through a lot of pain if you let it be pain, or you get to a point of this almost like detaching yourself and almost saying, let's see what happens and let's be pleasantly surprised. Again, this is Andrew Abraham. I will be teaching a course on trend following. It's everything that I've learned over the last 18 years. It's not a get rich quick. It's not a become an instant millionaire. That's not what trend following is. It's a marathon. Go through ugly periods, but over time you stand the potential to grind out some profits potentially. Again, but past performance is not indicative of future performance, and we are dealing in uncertainty. Again, I invite you to come to my course and to learn what trend following is.